Good morning, everyone, and today we are going over my research for the stock SNPR, which is a SPAC or special purpose acquisition company merging with the EV charger company Volta. As you know, this video is going to be pretty quick and straight to the point, so I'm going to go over my notes that I have accumulated while doing my research on Volta. And then after briefly going over those notes, I will go more in depth on each note that I have. Before I go into my notes, I want to say that the thing that stands out to me the most about Volta is their business model. They make their money off of the ads that they put on their chargers, and they don't actually make money off the chargers themselves. This allows them to offer free EV charging to their customers, and I think this gives them a great advantage over their competitors. They also take great effort when researching where to install their EV charging stations and focus on installing them in areas with a high concentration of consumers and retail stores, which allows their ads to perform very well for their advertising customers. Alright, so as you can see, I have my notes pulled up on screen, and I'm just gonna run through each note really quick, and then after I do that, I will go back and go more in depth on each note. So I have the investor presentation at the start, which we're probably not going to look at, and then here I have a Google sheet that has the current market cap and price to sales ratios for SNPR. So we'll take a look at this, and as you can see, the current share price for SNPR is $9.91, and they have a pro forma shares outstanding of 203.1 million shares, which gives them a market cap of around $2 billion. Now here I have a list of PS ratios for each year, and the PS ratio for the year 2021 is 42, so that means that the market cap is 42 times 2021 revenue, and which is a pretty high price to sales ratio. Usually it's a lot lower, but this is an EV charging company, and most of these companies do also have pretty high price to sales ratios. And I have competitors down here, and we'll go into those in a little bit. But then for 2022, the price to sales ratio is 14 times, and then 2023 it's 7 times. 2024 is 4 times, and 2025 is close to 2.5 times. If we compare this to other EV charging companies, we see that Volta's price to sales ratio is actually a lot lower than some of its competitors. If you look at EVgo, its 2021 price to sales ratio is almost 150 times, whereas with Volta it's only 42 times. And then if we look at ChargePoint has a price to sales ratio of 38 times, which is about the same. And if we look at Blink, we have a 2020 price to sales ratio of 210 times. We don't actually have the 2021 price to sales ratio. I cannot find their 2021 estimated revenue. So we can probably assume the 2021 price to sales ratio for Blink is going to be a little higher than Volta's 2021 price to sales ratio. Yeah, now going on to EVbox, we can see that the 2021 price to sales ratio for this company is only 11 times. And the reason that I believe this is so low is because the merger between EVbox and the SPAC that it was merging with was actually called off. And I'm not sure if that has actually been rescheduled, but when it was called off, there was a huge dip in the price of the SPAC merging with EVbox, and that is why I believe the price is so low. And the ticker for the SPAC that was merging with EVbox is actually TPGY, and I am not sure if that deal is back on track yet, so I have not really been paying much attention to this one. I've just been looking at Blink, ChargePoint, EVgo, and I also have Tesla up here. Volta is definitely a more speculative company because it is in its early stages of growth, so that is why the price to sales ratio is higher than Tesla, because there is a lot of growth that is priced in here right now. So now we have gone over the price to sales ratios for each year. They expect to be EBITDA positive in 2023. However, this does not mean they will be net income positive, because EBITDA does not include interest, tax, depreciation, and amortization. We do not yet have access to all the financial statements, which is why investing in SPACs can be so risky, because we don't really have an actual idea on how the business is really performing until the SPAC merger is actually complete and those financial statements are filed with the SEC. And sometimes those financial statements aren't even audited. So That is one of the bigger risks with investing in SPACs. I always keep that in mind because we don't actually know how the business is performing until we get those financial statements, and that doesn't happen until after the merger is complete usually. They forecast more revenue than EVgo, and if we go back to this price to sales ratio chart, we see that EVgo has a much higher price to sales ratio when in fact they probably will have less revenue than Volta. So I thought that was kind of interesting. The deal is expected to close in August. Founded in 2010 by Scott Mercer, Volta provides free charging in exchange for ads and product placement on the screens of their charging stations. They make their money on ads, not on charging, and they are the only company that does this. This is something I mentioned in the beginning of the video. They strategically position their chargers in consumer-dense areas, such as in front of retail stores. This makes their business model of exchanging charging for ads because those ads have the potential to perform very well in a high-traffic consumer area. This industry will likely become very competitive over the next few years, so Volta could have an advantage with their unique business model. Volta Charging partners with Hackensack Meridian Health to expand electric vehicle charging access. 21 chargers installed at first and then more over time. This is a health company, and at each of their locations they're going to be installing a couple Volta chargers. As time goes on, they'll install more at each of this health company's locations. There are now 100 Volta charging stations in Maryland. Partnership with Bloomberg to display air pollution scoreboard on Volta charging stations. Partnership with Jeep to promote the Jeep Wrangler 4xe through Volta charging stations. Currently has around 1,700 stations in 23 states and wants to expand to 3,000 by the end of 2021. Macy's is adding at least 20 charging stations this year with more to come. Raised $125 million in an oversubscribed Series D financing round. Kohl's wants to expand from 100 chargers to 275 chargers. The EV charging station market is expected to grow at a CAGR of 46.6% until 2027. L2 charging segment is expected to be the largest, and the Asia Pacific market is expected to hold the largest market share by 2027. Volta chargers charge at L2 charging speed, which, as you see here, is expected to be the largest charging segment. The charging speed for L2 is 7 to 10 kilowatts or up to 70 miles of range added in a 2-hour session, and DC fast charging speed 50 to 60 kilowatts or up to 105 miles of range in an added 30-minute session. And this DC fast charging is another charging speed that Volta chargers offer. Vince Cubbage, the CEO of Tortoise Acquisition Corp. 2, is a board member of Hyliion. This is something that I found kind of interesting because Hyliion is an electric commercial vehicle company, and the CEO of Tortoise Acquisition Corp. 2, which is the SPAC merging with Volta, is a board member of Hyliion, so I thought that was slightly interesting. The management does not seem to have much past experience in EV vehicles or EV chargers. This is a slight red flag to me. Also, the CEO is pretty young. He's about 35 years old right now, so that's something to keep in mind. As of writing this, SNPR has 10,410 followers on StockTwits. Usually, I like to think the stock has a little bit of a hype factor if it has over 5,000 followers on StockTwits. Don't quote me on that, but if I see a stock that has a large amount of followers on StockTwits, usually I see that as a good sign, but this is something that I definitely do not pay a crazy amount of attention to. Alright, so we've just finished briefly going over these notes, and at this time I want to remind you guys to like the video if you're enjoying and subscribe to the channel so you don't miss out on future videos. I am simply here to provide you guys with value, knowledge, and entertainment, and by subscribing you help me continue to do just that. Alright, so now that we've gone over these notes briefly, I'm going to go back and go in depth on a few of these notes. I already kind of went in depth on the price to sales ratios. They expect to be EBITDA positive in 2023, and this does not mean they will be net income positive because EBITDA does not include interest, tax, depreciation, and amortization. This stood out to me because they are expecting to be EBITDA positive pretty soon here. 2023 is not even 2 years away, and as a growth company, being profitable really quickly is pretty impressive. Now, we obviously don't have financial statements that show the past profitability of this company, but this is something that I could honestly see happening because with their unique business model of only getting their revenue from paid ads, I think that this could make them a much more efficient and more profitable company than something like EVgo, where they just simply charge their customers for the charge they are getting from EVgo's chargers. Whereas Volta has advertising customers that pay good money to put their ads on their chargers that are positioned in very consumer dense areas. And then Volta is able to offer free charging for their consumers, which obviously means more traffic for these ads. So if they are able to be EBITDA positive in 2023, I think that would be really great for the company. And I see that as a really positive factor for a growth company like this. Now, the deal is expected to close in August. This is obviously not guaranteed, but it would be nice to see the deal close sooner rather than later. We already went over their business model. They provide free charging to their customers in exchange for ads and product placement on their charger. They strategically position their chargers in consumer dense areas such as in front of retail stores. Now, I think this is something that Volta is doing right because as the EV charger industry grows and becomes more competitive, I think that real estate like this in consumer dense areas and in front of retail stores will become more valuable. And the fact that Volta is doing its research and putting up charging stations in these areas so early makes me think that they know what they're doing and they have a good shot of being successful in this business. And I also think they could have an advantage with their unique business model because as the space becomes more competitive, I feel like competitors will start undercutting each other for prices, whereas Volta gives free charging no matter what, because they get all of their revenue from the ads that they put on their chargers. Alright, so there are now 100 Volta charging stations in Maryland. This is basically just a milestone they passed where they have 100 charging stations in a single state. They have a partnership with Bloomberg to display air pollution scoreboards on Volta charging stations. Now, this is pretty cool. It is basically where Bloomberg is now an advertising partner with Volta, and Bloomberg is going to display its air pollution scoreboard on Volta chargers across many different cities in the US. And these air pollution scoreboards basically give a description of what the air quality is like in that certain location. They had a partnership with Jeep to promote the Jeep Wrangler 4xe through Volta charging stations. And basically, Jeep is paying Volta to advertise the new Jeep Wrangler 4xe on its chargers. And I think this is really good to see because big brands like Jeep are actually using Volta chargers. So I think this kind of confirms that their advertising strategy actually works for their advertising customers. Volta currently has around 1,700 stations in 23 states and wants to expand that to 3,000 stations by the end of 2021. This is pretty self-explanatory. This is just a goal that they have for the end of 2021. And this is good to see because it shows that they're looking for significant growth in 2021. Macy's is adding at least 20 charging stations this year with more to come. Basically, on April 2nd, 2021, Volta announced that it is going to expand its partnership with Macy's to offer free charging to its customers at Macy's locations. Volta already had 100 charging stations at 40 Macy's locations, and Macy's wants to expand this to 20 more Macy's locations. So I'm assuming that they will be adding roughly 50 more Volta charging stations to their locations. And this is pretty cool to see because Macy's is a bigger in-person retail brand, and this is exactly where Volta wants to put its chargers. And to see that Macy's wants to expand their partnership is really cool because I think it confirms that Volta has a good product and they know what they're doing. Kohl's wants to expand from 100 chargers to 275 chargers, and this is another example of a big brand that wants to expand their partnership with Volta. Again, I think this is a great sign because it shows that, or at least I think it shows that Volta knows what they're doing and they have a good product. The EV charging station market is expected to grow at a CAGR of 46.6% until 2027. L2 charging segment is expected to be the largest, and the Asia Pacific market is expected to hold the largest market share by 2027. Now I think this is good because Volta is in a high growth industry. 46.6% CAGR per year until 2027 is crazy growth. And to see that L2 charging is expected to be the largest segment in the EV charging station market is really good because Volta's main charging speed is L2 charging. So I think that's great to see. Now the Asia Pacific market is expected to be the largest market by 2027. And this makes sense because China is a little ahead of the United States in the electric vehicle game and the electric vehicle charging game. So I'm not really surprised to see that, and even though Volta is not in the Asia Pacific market, I'm not worried about that. And then here, Volta chargers charge at L2 charging speed and they charge at DC fast charging speed, which is also good to see because DC fast charging speed I think we'll end up seeing more and more demand as this industry grows. But then again, L2 charging is expected to be the largest charging segment. Alright, and that is about it for my notes. Alright, so now that I have gone over my notes on SNPR and Volta, I am going to talk a little bit about my investing strategy for the SNPR and Volta merger. Going forward, my investment strategy for SNPR is to dollar cost average into shares up until the merger, which is expected to happen in August. So until then, or until the stock starts to move, I will likely buy shares whenever I see a red day. I really don't think this company is getting as much attention as it deserves right now. And because of this, I am anticipating a run-up into the merger. If we happen to not get a merger run-up, I will likely sell my shares for break even or at a small loss. However, if we do get audited financial statements right after the merger and those audited financial statements look good, there is a chance that I will hold my position for the long term. And as always, I would like to emphasize that I am not a financial advisor. Please do not do exactly what I do. I always encourage everyone to do their own research and come up with an investment strategy that suits you. Alright guys, that is pretty much all of my research on the SNPR and Volta merger. If you enjoyed the video, please make sure to leave a like and subscribe to the channel so you don't miss out on future videos. As you know, my only goal with this channel is to provide you guys with value, knowledge, and entertainment. So if you subscribe to the channel, you are helping me continue to do so. Thank you so much for watching. I hope you have a great rest of your day, and as always, I will see you in the next one.